Welcome to this explainer. Today, we're jumping right into the anatomy of an enterprise, the economics of smuggling. Look, usually when we think about the illicit economy, we picture this gritty, chaotic underworld full of criminal masterminds and high-speed chases, right? But the data reveals a totally different reality. It's not a chaotic underworld at all. It's a highly calculated, mathematical business model driven by supply, demand, and profit margins. We're essentially looking at an illicit Fortune 500 company.
Okay, let's dive into this and ask ourselves a question. If you were running one of these global smuggling syndicates, what is your most valuable asset? You might think it's untraceable weapons, right? Or maybe some advanced fleet of stealth submarines. Well, you really need to rethink what actually holds value in a black market. Because the asset driving massive illegal revenues often involves products you literally walk past every single day in the grocery store.
Take a look at this staggering number, over $4 million. That's not a shipment of gold bars or exotic sports cars. That is the estimated profit margin of a single truck moving totally ordinary, mundane cigarettes from Virginia up Interstate 95 to New York City. As a business owner, your costs here are incredibly low. You buy in Virginia at a 30-cent tax rate, and you sell in New York where taxes push the retail price up by almost $6. You do absolutely zero product development. You literally just drive across state lines to exploit the tax difference.
And this brilliantly illustrates a fundamental, almost bizarre truth about this entire industry. According to a Virginia State Police agent, moving cheap tobacco is actually vastly more profitable than moving cocaine, heroin, or guns. Why? Because the physical product is entirely incidental. The true asset they are selling isn't tobacco, or counterfeit handbags, or fake medication. The asset they are selling is quite literally a number written into a tax code. They are simply monetizing the legal boundaries created by governments. In economic terms, this is pure arbitrage. Smugglers are essentially just heavily armed Wall Street day traders, but instead of trading currencies or stocks, they're trading physical goods across borders. They buy a commodity where the price is artificially low, they sell it where the price is artificially high, and they pocket a massive spread that they did absolutely nothing to create. The research confirms this dynamic is totally universal. Whether a syndicate is moving diverted pharmaceuticals, counterfeit luxury watches, or subsidized fuel, it is the exact same business model, just wearing different clothes. Let's move on and see how this builds, because when you map out the actual supply chains, the org chart of these networks mirrors legitimate global commerce perfectly. At the entry level, you have the runner, the single driver on the highway. Scale up, and you hit the container tier, where sophisticated operators are moving goods by the millions through international ports. And at the very top, the manufacturer. These are dedicated, massive counterfeit factories that function exactly like a multinational manufacturing hub. Now, that middle tier, the container level, that is where the real money is made. And here's why. Out of the staggering volume of cargo containers circulating the globe every day, only a tiny fraction, around 3%, can ever be physically scanned. Smugglers know this math inside and out. If they send 10 containers and one gets seized at the port, they don't panic. They simply write it off as literal business overhead. The sheer profit from the other 9 still makes them incredibly wealthy. It's just a calculated risk, with the odds heavily, heavily stacked in their favor. But running a multi-million-dollar business in the shadows comes with a really unique set of management problems. How exactly do you run an HR or a legal department when you operate entirely outside the protection of state property rights? In legal markets, if a supplier cheats you, you just sue them. But in illegal markets, the state is absent. The courts are close to you. So illicit enterprises have to rely on character, trust, intense reputation vetting, and alternative, often brutal, methods of resolving disputes and ensuring quality control. So the crucial point is, how do these organizations actually manage all that risk? Well, in the legitimate corporate world, a company buys a commercial insurance policy. In the illicit economy, you buy corruption. Bribing a customs official or a border guard isn't just a moral failing. From a pure economic perspective, it's a standard corporate insurance premium. The smuggler pays a fixed cost, the bribe, to buy absolute certainty, converting the wild variable risk of losing their cargo into a completely predictable expense. But what happens when trust and corruption aren't enough? That's when you bring in the ultimate enforcer: violence. Economically speaking, though, violence is actually terrible for business. It attracts police, it draws media attention, and it disrupts your supply chains. However, because these criminals lack access to civil courts to enforce their contracts, violence functions as a highly costly but completely necessary background threat. It deters defection and ensures everyone cooperates. And this ruthless business logic applies way beyond just consumer goods. It applies to moving people as well. Look at the human smuggling sector. It operates exactly like a travel agency, offering highly differentiated service tiers based entirely on the depth of the customer's wallet. Can you afford 15 grand? They'll fly you safely on an airplane. Only have 5 grand? You're getting routed through a dangerous combination of small boats and overland paths. It is a terrifyingly pure, unfeeling market, just responding to demand. Now, what's really interesting about this slide is the financial engineering behind these specific networks. Because clients are paying such exorbitant fees, an intricate S-score system has actually evolved. The migrant deposits their funds with a trusted third party. Then, the smuggler absorbs all the massive upfront financial risks, paying the bribes, setting up the logistics. Only when the client actually arrives safely at the destination are the funds released. It's essentially a money-back guarantee. It proves just how sophisticated and deeply business-minded these organizations truly are. When you step back and look at the whole picture, the ultimate profit and loss statement of the underworld, this entire business model survives on sheer arithmetic. Yes, the logistics are massive, the bribes are incredibly expensive, and the threat of lost cargo is always there. But the spread, that huge gap between the production cost and the street price, is so unbelievably wide that the profitability completely eclipses those inherent risks. It's just an incredibly resilient cash-generating machine. Which brings us to the ultimate question, right? If you're policymakers or law enforcement facing this down, how do you bankrupt a black market? How do you successfully disrupt an enterprise that is this economically resilient, globally distributed, and wildly profitable? If the fundamental driver is quite literally just a math equation, can you ever just arrest your way out of the problem? Well, the economic data points to a deeply frustrating reality, known as the enforcement paradox. When authorities increase policing and crack down, they inadvertently raise the risks for the smugglers. And how do businesses compensate for higher risk? They increase their prices, demanding a higher risk premium. So the product becomes more expensive, the market becomes even more lucrative, and that huge revenue becomes even more worth fighting and killing for. Paradoxically, more enforcement can actually lead to way more violence. So what actually works? You have to bankrupt them with economics. The true market killers are shrinking demand or legalization. Think about cannabis in fully legalized areas. Once a legal, regulated supply chain matures, retail prices fall. That artificial spread the black market relied on simply vanishes. When that price gap closes, the cartel doesn't fight back. Their illegal operation just evaporates overnight because the math suddenly goes red. So I'll leave you with this final provocative thought. The smuggler is ultimately just a ruthless capitalist, operating on a spreadsheet, filling a void created by borders, taxes, and prohibitions. If a black market is simply a business built on a price gap created by our very own laws, can we ever truly police our way out of it? Or do we need to start dismantling the very economic foundations these enterprises are built upon? Thank you so much for joining us for this explainer. We hope this totally changes how you view the business of the shadows.